Jalsa. Jail superintendent dismissed. Team of cops appointed to probe jail party videos. Yogi's big Vande Mataram vow. Yogi says will make Vande Mataram singing mandatory. BJP renews Vande attack. Yogi says Jana Gana Mana Vande Mataram in all UP schools. Union Mantri's stunning allegations against AIMIM in Hyderabad alleges AIMIM running rape racket. Shares video of rape gang trying to abduct minor girl. Double whammy for toxicity. Delhi toxic air froth returns to Yamuna. White foam engulfs Delhi's lifeline. Air quality remains poor. And we have some news just coming in. Actor Shilpa Shetty and her husband businessman Raj Kundra have now approached the Bombay High Court seeking quashing of the FIR registered and being investigated by the Economic Offences Wing of Mumbai Police regarding the 60 crore cheating case. Advocates Yusuf Iqbal and Zain Shroff appearing for the complainant in the case submitted before the bench of Chief Justice Sri Chandrasekhar and Justice Gautam Ankhad that they hadn't been served with a copy of the two petitions filed by the couple. But the bench has adjourned the hearing of the petitions to the 20th day of November to enable the state and the complainant to file a reply. The couple's plea filed through Advocate Prashant Patil states that the criminal proceeding has been maliciously instituted with an ulterior and malefied motive, wreaking vengeance on the petitioner and with a view to extort money and compel the petitioner to pay a huge sum of money to the complainant. Vidya has more. Vidya, take us to the details of what has now been said by court, even as the heat on Shilpa Shetty and husband Raj Kundra is only worsening in the sense that the noose is tightening around them as far as this alleged offence here is concerned.
Remember, there is a lookout circular issued against them because of which they have not been able to travel out either for leisure or even for work purpose. Remember, Shilpa Shetty herself had a shoot in the Los Angeles area with a YouTuber, a famous YouTuber, but couldn't go for it in spite of it being her right to livelihood that it was pointed out in the court. However, now they have filed a fresh petition asking for seeking a quashing of the FIR that has been registered by the complainant for a 60 crore cheating and saying that because during demonetization they had lost the entire money, they themselves have also suffered. The company which they had set up had gone into insolvency, and they claim that the complainant in the case is now trying to extort the 60 crores when they themselves have also lost the money. And the civil proceedings could not go any further, so the complainant has now resorted to this. Never mind, the court will now be hearing all these issues after the replies are filed by the investigators as well as the complainant.
So talk to us about what the petitioner here in this case has said, given that it is now being said that this is being done to extort money out of the couple.
Well, but this is exactly what the petition says. It elaborates as to how there have been the company that they had set up where Kothari had invested the amount that has actually gone into insolvency. And while the civil proceedings could not really emanate anything further for Kothari, so that's the reason why he did forum shopping, it alleges, and says that, you know, this is why he's filed through the police, is filed to manage to file an FIR and is trying to extort the money, the 60 crores of rupees, which they don't have because they themselves have also lost the money in this entire transaction after demonetization.
I'm going to leave it there for the moment. Getting in those details is my colleague Vidya reporting on Shilpa Shetty and husband Raj Kundra moving High Court seeking quashing of the FIR against them. Let's now go across straight to my colleague Sakshi Batra of Business Today with all the updates on the markets. Over to you, Sakshi.
Good afternoon and welcome to the Market Closing Show. This is our collab show between Business Today and India Today Television. I'm Sakshi Batra and this is the 3 p.m. bulletin where we are going to be getting you all the stock market closing action. But first up, let's take a look at what's hot in the corporate and the financial space. Stock markets in India are back into the green after 3 days of losses. IT, pharma and metal stocks lead the charge as Nifty inches towards 25,650 mark. Investors buy the dip as Asian markets recover on the news that the US government shutdown may end soon. MCX gold rates also rise sharply, about 2% in trade to 1,23,130 rupees per 10 grams, and silver is also up by about 3% at 1,52,000 mark. Both rise as positive global cues as well as rising expectations of another rate cut by the US Federal Reserve next month. Yes. Much hyped Lenskart IPO cracks on listing, opens at a 3% discount to the issue price of 402 rupees. Meanwhile, another buzzing IPO, Grow, will finally have its allotment today and list on the 12th of November. But its grey market premium has also fallen to 4% from 18% earlier. It's the charge of the Defence Brigade on D Street today. Both public and private sector companies are big gainers after massive push into the research and development by Defence Ministry. Allocation doubled to more than 32,000 crore rupees for the next 5 years. Also, letters demand proof of payment of $100,000 have started to appear in mailboxes for all those seeking an H-1B visa. Experts say even those applicants who do not have to pay are getting the demand note. In the absence of clarity, Indians account for 3/4 of the applicants are also the worst impacted. Straight away dive into the stock markets and see how the mood is towards the end of this Monday trade. Well, when we look at the Nifty, we are still at about 25,583, even though we have slipped from the day's high point, holding up 0.3% higher, largely on the back of gains in IT stocks today. That's the top moving sector. Pharma stocks are also higher in trade. Metals are shining bright. You also have the broader markets, the mid and the small cap indices, both in the green as well. We're also looking some gains in the auto space, in the infrastructure space, oil and gas as well. But what slipped lower? PSU banks were already down from the morning trade. Now coupled with it, you have FMCG and the real estate stocks and the media stocks that are hovering slightly below the flat line. Which are the top gainers on the Nifty? Well, you have a lot of moves that are coming in from the IT pack like Infosys, like HCL Technologies, but those are the top laggards on the screens for you as well. So Infosys, HCL Tech, Bajaj Finance, these are the top gainers in trade, 2.5% of move that can be seen. Grasim, Wipro, these are the declining trends that we are spotting at this point in time as well. Asian Paints has also picked up. Hero MotoCorp, TCS from the IT pack, all of that is up and about in trade. But let's straight away go across to our guest now. Abhishek Basu Malik, the co-founder and fund manager of Sri Rama Managers PMS, is now joining in to share with us a fresh perspective on the markets. Warm welcome to you, Abhishek. Good to have you with us. First up, your sense on the markets. Do you finally see that yet again the attempt towards picking up pace on the markets is concerned will try to see some higher levels, or will we again be in a volatile consolidative zone this new week as well?
Good afternoon to you and all your viewers. Very difficult to say whether we are going to finally get out of this uncertain zone as yet, because ultimately I think medium to longer term we will get out of the uncertain zone once the US tariff situation is clear. Before that, I think we will continue to sort of keep going up and down. A few days up, a few days down, and that's how it's going to continue.
Okay. Any clear pockets that you're finding some green shoots in? We are at the fag end of the earnings season. What do you think has reflected some optimism this time around, Abhishek?
I think, a lot of companies actually have performed quite well. So that has been quite heartening. uh, you know, results from a number of sectors have been quite good. In fact, the overall median, the PAT numbers that I was looking at, PAT growth has been above nearly about 12%, which is fairly good compared to what we've seen in the last in the previous quarter. So things are getting better. I think we need another quarter to actually see the impact of the GST rate cuts coming through, so that we will be able to figure out how things, especially in the consumer segment, how things are by the end of this quarter, hopefully.
Okay, got that. Another pocket that's on the buzz today is the defense space. Remember, all these stocks have been in focus as the ministry has now revealed a massive allocation for research and development. Defense Minister Rajnath Singh is currently meeting defense PSUs to chart out the roadmap for the next 5 years, while the majority of the R&D funds will now be plowed into public sector units. Private firms are also expected to be net gainers. My colleague Aishwarya Patil is now joining in to share with us more details on the same. Aishwarya, what are you getting and gathering from the government at this point in time, and could you give us a sense of what is the speed at which this will be incurred going forward?
Well, today in trade, if you notice, actually, all of these, the defense pack, in fact, all of these were trading in the green. These 16 PSUs specifically, top ones, HAL, BEL, BML, all of them were trading in the green. Now, Defense Minister Rajnath Singh is about to conduct an annual review meeting of all of these 16 PSUs. Defense PSUs in specific. At this annual meeting, they will be reviewing the performance of the last 10 years. They infused about over 30,000 crore rupees over the last decade, and alongside they will also be looking at the next 5 years and the plan they will chart out as far as the roadmap for these 16 key PSUs are concerned. As far as the defense space is concerned, they will also be looking at a renewable energy report, how sustainably these some of these companies can be run in the future, and discussions around increasing investments as well as manpower as far as R&D of all of these companies is concerned is about to be doubled down. The investment, proposed investment, in fact, is projected at over 32,000 crore rupees for all of these PSUs as well. So that's part of the agenda as far as Defense Minister Rajnath Singh is concerned. We'll take a quick look at some of the defense stocks, BML, BL, etc. All of them trading in the green.
Right, Aishwarya, thanks a lot for that. The index itself is up by about 1.5% at the day's high is what we are looking at. Yet again, some more good news coming in for the defense space stocks. Abhishek, let me come back to you and help our viewers understand what's your fresh view on the defense space. You know, over the last couple of months, even though the entire sector-wide momentum is missing the way we had seen in the year 2024, this time around the focus on larger, orders that are coming in from the government, DAC clearing massive projects, and now we are also hearing that doubling of R&D spends will also be seen for a lot of these companies. How are you looking at the defense pack?
I think defense is poised to do very well over the next few years, not only for domestic consumption as well as exports. But having said that, a lot of these defense companies, the valuations are not cheap. So you need to get that part correct when you are investing. You need to be able to understand, what you are getting into, because the stocks definitely are not cheap.
Absolutely. So that's one factor one has to definitely look at, whether the valuations will justify more good news coming in, or is it already priced in. One will have to look at all of that aspect as well. But apart from the entire stock market buzz that we are talking about, the other asset classes like gold and silver are also seeming to come back into action after some 1 to 2 weeks of consolidation. Now, MCX gold prices have also risen about 2% in trade to 1,23,000 rupees. What we are also seeing is that silver prices are also higher in trade. Both of these assets are also up, reflecting the positive global cues. And for more on this, we have a special guest who's also joining in into the conversation, Mr. Ajay Kedia, MD and Director of Kedia Advisory is now with us on the program. Ajay, warm welcome. Always a pleasure to have you with us. First up, give us a sense of the gold and silver prices. We had seen some correction over the last 1 week, 10 days odd following Diwali, but now seems like, the action is picking up pace yet again. What's the sense that you have on gold and silver right now and the path ahead?
Very good afternoon, Shakshi. Definitely gold and silver in the month of October have seen a new lifetime high in global market and domestic market. On the eve of, we can say, Diwali, the demand from physical market was too good. Even silver prices has tested the level of 2 lakh rupees on domestic market. Gold was around 132. And in the anticipate, some correction was required, and we have seen almost 11% correction from the high in gold, and whereas silver has corrected around 18%. But currently, we have seen US shutdown is still going on, uncertainty is still prevailing. So after this fall, market has started moving again on a positive side. Whatever the factors up till now we have seen has been subsidized right now. So I think during this week, we can see some good news from US side, whether this shutdown will continue or it could be on verge of completion. So I think a little bit bounce has been there. It could be a technical, it could be on the anticipate that December there will be a rate cut. So I think gold might get a level like 4140, 4115 international. Domestically, we can see a bounce towards 1,25,000 as follow-up buying has been observed. And year end is nearby, then definitely we can see some portfolio reshuffling. But some sense of positiveness can be seen in this week.
Okay. What about silver? Do you expect an anticipated surge there as well?
Yeah, it's very important for silver because in 1980, 2011, we have never seen prices closed above $50 mark. So I think in international also we have seen short squeeze. That is why prices has rallied up till now with a very good bounce. Timing, we expect some correction was been there in the market. A little bit bounce to the level of $51 can be observed in COMEX. Whereas on domestic side, 1,55,000 should be the immediate target. But be cautious because as we comes near to the year end, maybe portfolio can be revamped again and we may see profit booking in gold and silver once again. But right now, this week is going to be positive for gold and silver.
This week is going to be positive for gold and silver. Meanwhile, viewers, what's also happened is that the capital markets regulator, SEBI, has also warned investors on the risks of digital gold. SEBI has warned investors about digital gold that are sold on fintech apps and websites, calling it unregulated and risky as well. So what exactly is digital gold and why has the SEBI called it risky is what we will try to understand today. Remember, digital gold works like if you want to buy a small fraction of gold, that's much lower than even 1 gram of gold, say even for a meager amount of 500 rupees. Then there are lots of fintech apps that allow you to fraction buy such gold as well. These companies claim to store equivalent value of gold in a vault with a custodian. Some of the platforms will also let you convert your holding into physical gold much later once you have accumulated a certain amount. Now the problem is that there is no uniform rule book for who checks, who audits and guarantees that the gold exists in the vaults as well of such companies. There also is no clear legal framework that defines what happens if the platform goes bankrupt. Now remember, unlike mutual funds, stockbrokers who must follow SEBI's strict rules and maintain segregated client assets and also submit regular audits, digital gold platforms are essentially self-regulated for now. Now remember, SEBI is not saying that don't buy gold or don't buy digital gold completely or is it illegal. It's only saying that don't buy unregulated gold without knowing the risks as well. So let's try and understand this on a broader footing with both our guests. Ajay, first up to you. How do you see this advisory and do you have also a lot of clients that have called you up and tried to understand what is this regulation for? What are the aspects that are going to come under this advisory?
See, why we need this advice, why this advisory is out and why we need this uniform framework. Because see, in last 10 years, we have found gold as a asset class. Prior to that, we generally buy gold from the physical jeweler, and we used to consume. We don't buy gold; we consume gold in India. But in last 10 years, we have seen gold could be a good asset class where there could be a proper entry, proper exit. And in last 10 years, we have seen various products that has evolved in gold segment, like SGB, which was the one of the best product I used to say. Then mutual fund, we have multi-asset, we have ETFs available, and we have digital gold also. But right now, digital gold are being we can say self-regulated by jewelers, and we as a SEBI, they required that at least there should be some regulator on that. Either RBI or either SEBI should be there, because it is a very big market. So I think looking to this only, SEBI has came out with the advisory that if you are buying, there should be a proper channel should be there.
Absolutely. Absolutely. Abhishek ji, I'll also bring you in over here into the same conversation and try to understand. There are a lot of investors. There are so many fintech apps that have generated over the last 5 to 10 years, just like how Ajay ji has pointed out. People can just spend minimum amounts and, hope that they are accumulating a lot of gold. What happens to those kind of apps? There are so many apps like Jar, Gullak that are getting very popular among a lot of investors there. What happens to those after this kind of an advisory? Do you think investors now who have had such an exposure preemptively should now shift their money to what the SEBI has pointed out to, say, options like mutual funds, or maybe options like gold ETFs that come under the regulated assets from the mutual funds or the AMFI radar?
Yeah, I think SEBI's guideline or the direction is very, very welcome, because ultimately, see, the problem is, I'm not talking about any individual app or individual fintech platform, but if there is some problem at the company level and that company sort of, goes down, then there is no recourse for that individual investor at all. And the point is that if you have an alternative, by buying through mutual funds, ETFs, etc., why go through the unregulated, process where, if something goes wrong, then you don't really have any recourse at all. I think, it's a very, very good directive that SEBI has come up with.
Okay, Ajay ji, do you think a lot of jewelry companies, even the likes of bigger brands like Tanishq and all, they also have a section of digital gold on their websites as well? Maybe a lot of people explore that. Will that also come under this ambit of advisory?
Yeah, I think it would be a part of that advisory, but again, the question is why jeweler need this digital? Because now we have a Gen Z with us, and they and also the gold is slightly unaffordable at this current level. So what jeweler want, that customers should be continue to be in touch with them. With the digital gold, they can at least make sure that small buying could be there. And whenever they want a physical requirement, they can convert this digital gold to physical gold. The major objective is that, but it should be in a regulated environment. That is why I think it has been taken care, because many jewelers, see, company, what name you have mentioned is definitely going with a self-regulatory, but there are many other jewelers also which are having some, we can say, different way how they are taking this scheme. That is why we need a proper environment to grow this market.
Okay, we'll understand from both of you towards the end as far as the gold question is concerned. Abhishek ji, what is the advice that you would like to give to all our India Today viewers at this point in time? So far, they had only started to pick up, to believe what Ajay ji mentioned in the beginning, that gold has started to be seen as an investment asset rather than a consumption asset as well. And we have been talking so much about these newer forms of investing in gold via mutual funds, via sovereign gold bonds up until now, and even via ETFs as well. How should they be going about their investments now?
Yeah, I think first of all, most people who are investing in gold are doing it primarily because the price is going up. So it's some kind of a trend chasing that's going on. As and when the prices stabilize, I think that this incremental buying of gold will reduce. Having said that, in India, I think, is a huge market for jewelry that has not changed, even though we keep saying that the newer, the younger generation, etc., don't buy gold or don't wear, jewelry at all. But, reality is that sales for all jewelry companies are going up. So I'm not sure who is buying if, the younger generation are not buying. So probably the reality is that everyone in India, because of whatever reasons, social reasons, historical reasons, they do buy gold, and it and the gold that they buy is not really an investment buy. It is more,
Absolutely.
it's an asset, right? And uh, probably that's a good way to look at it, in a traditional sense of having gold
Sure.
jewelry as an
Okay.
asset is actually a good idea.
Right. 30 seconds to you, Ajay ji. What would you advise investors to buy into now? Physical vis-a-vis these newer forms of gold.
Yeah, one thing is very much clear. If you want to consume gold, if you are having marriages at home, immediately buy and consume. But if you are looking for an investment, then ETFs and these mutual funds are very good. But please try to understand a 20% allocation should be there in your equity portfolio. I'm not against with the equity, but 20% allocation will definitely give more alpha and reduce beta in your portfolio.
Fantastic. Ajay ji, we'll leave you at that. Thank you so much for being with us and, of course, giving us all your insights into both the outlook on gold and silver as well as helping us understand this entire issue. In fact, we'll continue our conversation with the Abhishek ji in just a bit. Remember, Business Today's Market Master series has been on, and my colleague Shilpa Shetty has exclusively spoken to Devina Mehra, who's the co-founder and CMD of First Global, to get her sectoral outlook on the current market environment. She's actually said that market leadership is actually shifting and investors now need to be more selective. Let's listen into what she had to say.
In the statistical modeling that you do of the market, ma'am, what are the top 3 sectors that are coming on the long side, and what are the 3 sectors that you think are avoidable from the point of view of earnings, momentum and market participation?
So I told you where we are overweight has been pharma, healthcare, auto components. We've added some more in auto, FMCG. Is also another sector where we are overweight. Banking, we are not overweight, but it's looking much better than it usually does. IT, probably now the underperformance phase is over. I would hazard that guess. Where we do not have much exposure are things like real estate, media, and things like that. And even some of the durable sectors also we would not have much. Partly also it's a risk call. It's not that real estate never does well, the real estate company, realty companies, but it's usually a volatile, risky space where we are a little diffident about taking exposure.
Right, coming back to our conversation with Abhishek ji. Abhishek ji, let's also understand from you the top sectors that are actually throwing us more opportunities for investors. How have you assessed some of the underperforming ones so far? Do you think finally their turn has come? Names like IT, pharma, do you think those are the sectors that will finally start to perform now?
I think IT is not in a very bad, position right now. A lot of the bad news is probably already in the price. Already we've started seeing mid-cap IT, some of the numbers coming out to be better than that, what was expected, right? So mid-cap IT looks to be an interesting place to be. Cement, manufacturing, defense, banking, all of these look fairly interesting from the short to medium term.
So focus a little bit on the IPO space as well, Abhishek ji. Today we've seen disappointing listing of Lenskart. We had been discussing about this issue and the lofty valuations debate that was surrounding it. Massive subscriptions, and despite that we have actually seen, Lenskart making a muted debut. We have Grow coming up ahead. What's your thoughts there?
as a business, I think Grow is fundamentally much better. They have very good business going. If I look at the number of investor growth in the last decade, I think roughly it has grown from 1 crore individual investors in India to about 12 crores as per the last SEBI report that I was reading. So in the last 10 years, the number of investors has grown 12-fold. And even if we assume that in the next 10 years, it's going to go up, maybe 2x, 3x, 4x from here, the opportunities for market related players, whether it's brokers, whether they are AMCs, wealth management, the entire space looks, fundamentally there is a lot of growth that is possible in these areas, and Grow is one of the market leaders in the broking space. So it's not a bad option. It's not a bad business. So we'll have to take a look, call on the valuations, of course.
Okay, a minute to go before we end the stock market's trade for the day. We'll come back to Abhishek ji with viewers' choice questions right after. But right now, if you look at the Nifty, it's about 79 points higher in trade, although we have slipped from the high point of the day. We had crossed over beyond 25,600. Right now, 0.3% higher is what we are holding on to. But clear visible signs of pressure at the higher levels again was seen, even though we end today's session on the green note. In fact, a flattish close for the Nifty Bank today on your screens is just about 0.02% high in trade, again slipped to the day's low point. IT stocks, however, have maintained their move about 1.5% higher is what they are at this moment. This is the top moving sector in trade today, followed by pharma as well as the metal stocks. Even the broader markets, the mid and the small caps are also up and about in trade. There are many others that have supported autos, for instance, infrastructure, financial services have also moved up. Looking at the top movers, you have IT names clearly. Infosys topping the charts. HCL Technologies, that is also up and about in trade. Bajaj Finance, that's also up. Coal India as well, that's also on the move. And Asian Paints, these are all the stocks that are actually hovering much higher in trade. But on the downside, when we look at the laggards today, you have Trent that has actually slipped by about 7.5% in trade. One of the sharpest declines that we've seen for Trent in this year on a single day. Max Healthcare, Tata Consumer Products, Eternal, and even Apollo Hospitals has also slipped by about 1.5% in trade. And that's how the closing action is on the markets. But let's get back to our viewers' choice questions. Our first question for Abhishek ji is from Ananya from Kolkata. She says, sir, could you suggest long-term investment stocks and ideas in defense? How are they placed? How is Hindustan Aeronautics and BEL if I have to invest in for the long term? Abhishek ji, your sense.
I think both HAL and BEL are very good options for long-term investors. They are going to be the two most important companies that the government is going to rely on for the entire defense foray. So good options to and the other thing that, as long-term investors, if somebody wants to invest in defense, there are good defense sector specific funds that they can look at, sector specific ETFs as well. So they can be more diversified and lower their risk if they're not very keen on picking individual stocks.
Okay, we have one more query coming in, and that's from Shivesh from Yamuna Nagar. Shivesh says, how are you seeing the entry of so many young investors in the stock markets? Is it a good sign, or does it indicate overheating into the markets? Abhishek ji, how would you advise that one?
No, I think it's actually very good because ultimately we need as a country to channelize our household savings into investments. The previous generations, our parents' generations, the entire saving used to go into fixed income. But ultimately, we need to, as a growing economy, right? Ultimately, businesses will always outperform, fixed income. So it's important that, especially the young, they invest money in businesses, in the stock market for the long term. I'm not talking about trying to do FNO, trying to do day trading, etc. But if they come in with the investment mindset, they will definitely benefit over the next 10, 15, 20 years when the country grows.
Okay, fantastic. Well, on that note, thank you so much, Abhishek ji, for being with us on the program. And with that, viewers, it's a wrap on the Business Today show. And in case you too have any questions, like our viewers have been asking about investments in mutual funds, having your SIPs, your stock-related queries, or your gold-related questions, then please do send them to us on the number that's flashing on your screens as well. And with that, it's a wrap on this special edition. Do stay tuned as the news coverage continues on the other side.